Hello friends, a warm welcome to my channel. Well, today's video is a bit different. I'm not talking about a particular stock or particular company or particular charts or something, but it's a very common question that people have asked me over time that can you tell me what exactly is the thing that I should progress with? Is it something that is related to trading that I should take up, or is it something related to investing that I should take up? Obviously, in a nutshell, if you look after trading and investing, pretty much both are same things, because at the end of the day your goal is to make money. So even if you are doing your investment, you are looking after a long-term chart and you are doing long-term analysis, and you know that the company will grow multifold, and then you are investing in the company because your intention is to make multi-bagger returns, multifold returns. In the same way, when you are doing trading, you are investing in the company for a short span of time. Still you are investing in the company, but you are not looking after a very long horizon. You're just looking after small movements and you are booking your profit in both the sides. So basically, in a nutshell, obviously both of the things are same, but there are a couple of queries that I'm going to ask in this video. Obviously, I'll be explaining you what exactly those queries are, what those questions are, because those are the questions you can only get answer from yourself. I cannot give you an answer on that, because when you try to analyze the answer of those questions, you will get an idea whether you actually are into trading or you are actually into investing, or if you want to take the flavor of both, because there are a lot of people out there who are like hybrid investors, I would say, because they do invest and they do trade, both of the things together. So in today's video, we were going to discuss that, and I'll make sure that by the end of the video, you already know that what exactly you are. Are you a trader or are you an investor? So straight connected to the last of the video, because there are a lot of queries we are going to answer. What are a lot of the questions that I will be asking you that you have to answer? And if you complete the video, it will give you a holistic view of what exactly you are. And first of all, the most important thing, if you like the content, don't forget to subscribe my channel and keep supporting as you have always done. So the first question, friends, that always comes to your mind is, what exactly is your investment goal? So what exactly your investment goal is means what is the outcome that you are expecting when you are putting your money, because you are making your money from your primary source of income, right? If trading is your primary source of income, then this question is definitely not for you, because you have already decided you're not doing any day job, you're not doing anything, you don't have a business, you're not running any agency, you're not doing job, you're not teaching, you're not doing online marketing, you're not doing any YouTubing, nothing you're doing. You're just focusing on trading, you're just interested in stock market trading, then obviously you are a trader. You have already decided the path for you. So this question definitely is not for you. But if you are confused, then the main important question, the first question that comes to your mind, should come to your mind, is what exactly your investment goal is. So investment goal means, are you someone who is happy with a specific return? So if someone tells you that, okay, I'll give you 5% return year on year, and the company that you invest, that also increases 5% year on, are you the person who is happy with that? If your answer is yes, then definitely you are an investor, because you are not someone who is interested in taking risk, who is not interested in putting in a lot of time, because trading is definitely not your primary source of income. You have a source of income, you have a day job where you are already making money, you are meeting all your expenses with that. The extra money that you are earning out of it is to actually go for the extravagant things. You book your holidays, you get an expensive car, you book a house, the extra things that you want to do, that is something you want to achieve from the stock market, because it's a secondary source of income. Then definitely you are an investor, you are not a trader. Because when you are a trader, you are not focused on what exactly is your long-term growth. You're not bothered about what the company's business is, how the company is going to do in future, because you're only bothered that the stock is giving you 5%, 2%, 1%, even 0.15%, 0.125%, like that, very fractional values in terms of return that you have invested. If you are investing 1 lakh rupees in a day and it's giving just 0.01% return, that's also, it's more than enough. But for investing, that horizon has to increase. So definitely the first question that I've told you. So the first question is, what exactly is your investment goal? Is it long term or is it very short term? So this question pretty much answers. Now the second question, friends, the second question, it is also very important. It says, how much time do you have to manage your investments? Exactly what I have said. So how much time you have to manage is it something that you don't care about short-term movements? Because this COVID thing happened, and now global almost recession is happening everywhere, job cuts, crude prices increasing. So this is something that always continues. You have Russia Ukraine war, and then suddenly this Japan ex prime minister is assassinated. So it's like a something that you cannot come out of it. It's a regular thing. It will continue to happen. So are you that person who is okay with what is happening globally? You don't worry about your day-to-day expenses. You are not worried about if your return is coming in the next 6 months. If you are that person, definitely you are an investor, because you are investing at every dip. Whenever the market crashes with any global news and there is a correction of 20, 30, 40%, you're putting your money, sitting back and relax, then you are exactly an investor. But if your expenses or whatever day-to-day activities you do is dependent upon the money that you are planning to get from the stock market, then definitely you fall into the trading category, because your day-to-day expenses is dependent on the money that you are investing in the market. Correct? It's a very simple example. Now that is the second question. So if you answer that second question, that pretty much gives you a clarity whether you are an investor or a trader. Now the third question that I would like to ask is, how much risk are you comfortable with? How much risk are you comfortable with? That means generally, who are long-term investors, people who invest for a long time, are not traders. They tend to diversify their portfolio. Say they invest in 15, 20, 30, 100 companies. They diversify the portfolio. They divide the fund into different companies. Some go with mutual funds, but people who are interested to take a bit more risk, they diversify the portfolio, invest in a lot of stocks. If you belong to that category, then obviously you are already distributing your risk, because if you have 30 companies you have invested, not necessarily all the 30 companies will do good. Maybe 10 of the companies are doing absolutely fine, 10 of them so and 10 of them is down. So on an average you will still make money. So how comfortable are you in taking risk? That is the third question. Because if you are happy taking a minimal risk, you are someone that who doesn't bother about how the investment is and what returns you are getting at the end of the year, then investing is your thing. Because in investing you don't have a set target that at the end of the year you have to make this much profit. You don't have a target on that, so you're pretty much okay with what you're investing. But if you belong to the second category, if you're a trader, then you cannot take an unlimited risk. Because just think of a simple example. If you have 100 rupees invested and you make say 50% loss, so your capital becomes 50 rupees. Now just to come at a break even point where you are neither in profit neither in loss, you actually have to make 50 rupees again from that 50 rupees. So previously your target was like 10-15%. Now because you have made already 50% loss, so your next target becomes 100%. So with that 50 rupees you have to make 100% return. You have to double your money, then your break even reaches and you are not in profit or not in loss. You're just recovering your money. That is the risk you have in intraday. But in positional, in long terms, you can just sit back and relax, because you are not risking everything. You are okay that even if the stock doesn't perform today, it performs after 3 years, 4 years, 5 years, you are happy because you don't need that money immediately. So these are definitely the three questions. Now the last and very important question, the fourth question that I would ask is, how do you approach investment decisions? Because when you basically decide that how you will actually put your money in a particular stock, what is exactly the thing that you take into consideration? So if you consider the balance sheet, the dividend history, or the sales growth, or the profit growth, or the EPS, or maybe the P ratios and all those things, you look after all the ratios and you look after the balance sheets, and you see how the company has performed over the period of time, you take into consideration all those factors, then definitely you are an investor. Because you are putting your money in the future of the company, not how the company is performing now. If a stock is trading at 100 rupees, you are not investing to get 110 rupees. You are investing to get 500 rupees, because you know the potential of the company. You know when actually the company gives you 5 times return, that is when you book your profit. So if your goal set is something like wherein you analyze the fundamental parameters of the company, then definitely you are an investor. But if you are more concerned about the technical parameters, you're just looking after the candles, you're looking after the RSI, you're looking after the moving averages and all those things, then definitely you are a technical investor, you are a trader. The reason being because you are not bothered about how the company is going to perform in future. You're just bothered about how the company is doing at present on the charts. If the company is oversold, if the company is overbought, if the company is giving a short covering, if there is short unwinding, so these are the things that you have to move. Then oscillator moving averages and all those things. Now if you belong to that category wherein you look into the charts and you try to find out small movements, if the stock is consolidating, if the stock is giving a breakout with volume, if the stock is doing a breakdown with volume, if there is a sudden volume spike, is that you look after in a stock chart, then definitely you are a trader, because you are focused only on very short span, very small segments. If you are looking after the chart in like 5 minutes, 10 minutes, 15 minutes, 30 minutes chart, then definitely you are a trader, because you are just focused on the short term. But if you are looking the chart in like 1 month, 2 months, 3 months, 6 months, 1 year, 5 years charts, then you are looking after the holistic view, horizontal view, and you are looking after a broad view of the company, how the company is going to perform. So basically these are just 3 or 4 questions which I have actually highlighted that will pretty much give you an answer that whether you are an investor or whether you are a trader. But now the catch is what I've said in the very beginning of the video, that there is a hybrid group as well. I am personally belong to a hybrid group because I have flavors of both. I also like stocks that will give me multi-bagger returns, but I'm also happy with booking profit that I'm getting today. So there is a best way of investing is do an SIP, create a basket of 10, 15, 20 stocks which are your favorite. Just invest 1 or 2 stocks on a monthly basis, 1 or 2 shares in every company monthly basis. Whenever there is a correction, market dip, 20, 30, 40% correction, just put your money in. If you're not interested with stocks, just put your money in Nifty or Bank Nifty Bs. That will be also fine. But along with that, also target to do some short-term investing to 1 month, 2 month, 3 months horizon, because money is something that should always rotate. Doesn't make sense that you keep and going by the trend that is overall we have day to day. The business models are changing, overall technologies are changing, so you never know what the company's business is and what the company's business is going to be in the next 5 years or 10 years. So at the end of the day, if you are looking after a very long-term investing, at this point in time, long-term investing concept has changed. How our parents have invested in like 30-40 years back, the concept has changed now. It's not like 5 years, 10 years that you have to put your money in and just put your money and forget. That concept is gone anyway. You have to monitor. If you don't have enough time in monitoring, then mutual funds is something that you should focus on, or else you should go with the Nifty Bs or any Bs that you are buying. But if you are into stocks, if you know that you can at least monitor once in a while, then you should always go for stocks. Investing and trading, hybrid is the key. So you have to focus on both. So whenever you have time, whenever you have bandwidth, it's not necessarily that you are buying a stock today and by end of day you're 9:15 buying a stock and 3:15 you have to close it. It's not like that. Don't think of doing trading as a trading. Just plan to invest, and if in a day, by the end of the day, if you're already making money, then why not book a profit? Simple example, you bought SBI in the morning at say 400 rupees, and at the end of the day SBI is already given like 410, 415 rupees. Then there's no point not booking the profit, right? You have already got 15 rupees in the same day. So don't invest if you're not a trader. If you're an investor, then don't plan to do trading. Just do the same way, but try to book profits more. So when you try to book profits more, slowly from investor, you become gradually a both hybrid and investor and a trader, which is actually the best thing that you can do in today's market. So friends, I hope this video was useful for you. I made this video in English because I know a lot of my subscribers are there and a lot of people are there who would be helpful, like who would get some benefit out of it if it is in English. So that's why I try to do it in English. But if you have liked this video, if you think that that this video added some value, then definitely subscribe to my channel and keep supporting, because your subscription is very important for me to grow. And I have my social media, Twitter, Telegram links in the description, so follow my social media links as well, because there are a lot of topics which I keep posting throughout the day in the market. It's not always practical that I make video on every topic, so that is something that you should all follow. And I hope you have enjoyed this video, and thank you for being with me till the end of this video, because it was a long video. Sorry for that, but there were a lot of things that I wanted to cover. Thank you so much, and I'll be back with something informational. And have a great day. Bye bye.